Today is Tuesday, October 1st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS Senior Financial Economist. Steve, let's start with the grain markets this morning. The USDA surprised the market yesterday with bullish numbers for both the U.S. corn and soybean stocks. Prices rallied. Do you believe this rally will continue? What do you think the farmer should be looking to do here?
First of all, I think we'll try to stabilize prices here and maybe rally into the October 10th report. I think that the fact that they lowered last year's soybean crop, the fact that corn stocks are 300 million bushels below trade expectation, and the fourth biggest miss since 2005 suggests that maybe you shouldn't be short this market until we see the October 10th numbers. Harvest is delayed because of the weather, but once we get into harvest, I think the farmer will sell this rally, and I think that the prices will find resistance here. World corn and wheat prices did not follow our rally yesterday, so now our world corn and wheat export prices are a discount to other nations, and so I think we're going to lose some export demand because of this rally. So I definitely think the farmer should be selling grain on this rally, whether it's inventory, whether it's crop in the fields, or whether it's 2020 crop.
A follow-up to that question, Steve. How does this change the 2019-2020 corn and soybean carryout outlook?
Well, for corn, guesses are somewhere between 1,500 and 1,700 million bushels versus 2190 that the USDA is currently using. For beans, we're looking at carryout that's probably around 525, and the government's using 640. Now the key is going to be the yield. Some private scouts who've been out looking at the crop thinks the corn yield should be 162 versus the government's 168, and the bean yield should be 46 versus 47.9. If the government was to say that in October, prices would definitely rally.
How about a rundown on the weather for both the U.S. and South America?
Well, the U.S. for October is going to be wet for October. It looks like November might be drier. So we're going to have to deal with these rains and try to harvest between them in the month of October. For South America, it looks like the weather's improving. Brazil's starting to get rains. Argentina could be starting getting the rains. And their 30 and 90 outlook calls for mostly normal weather. In fact, it calls for Brazil to have above normal rains.
Finally, Steve, what is the latest on the U.S.-China trade talks, and is the market really trading that right now?
I think the market is very sensitive to it because what we're hearing is that we might be 90% close to a deal. The problem is that the Chinese want the tariffs to be eliminated before they sign anything, and that they don't want to be forced to buy certain U.S. ag products. They want to buy what they need. Since the negotiations improved, the Chinese have come in and bought about 10 million tons of U.S. soybeans. And it really has offered support to the market, but it doesn't necessarily change things unless there's a deal and they come in and buy things like corn and ethanol, pork, and additional soybeans. So we need a deal to push prices higher. Without that, we're probably too high. And the concern is that maybe the Chinese are waiting for the presidential election to actually be serious about a deal. I don't think they necessarily want to help the president get reelected.
Thank you. Alan, share with our viewers your thoughts regarding the outlook for the U.S. economy versus the rest of the world.
Well, it appears that the U.S. is in a pretty good place overall, comparatively speaking. Right now it appears that the GDP for the third quarter will be somewhere around 2% growth. In fact, the Atlanta Fed is predicting 2.1% growth in GDP. Elsewhere, numbers are just not that good. The Eurozone is on the cusps of, so to speak, recession, a much weaker economy there. In fact, everywhere there's seems like economic weakness. Even in Australia, they had to cut rates today down to a record low. So overall, the U.S. economy, though still weakening, is going to hold up better than anywhere else in the world.
Here we are hovering in the U.S. stock market near the all-time highs. Can you talk a little bit about the stock index futures?
Well, the stock index futures today actually broke out to the upside, especially on the S&P chart. gave some of it back with the ISM report coming in very weak. But overall, it still appears that it's the interest rates that will continue to dominate as a bullish factor, as they have over the last 10 years or more, even over these geopolitical problems. So I would not be surprised to see some new record highs before the end of the year in the major indices.
Finally, Alan, the US dollar has continued to show some strength. Do you think it will continue to advance against the euro currency?
Absolutely. The indication is that the Fed is likely to be measured in how much they lower rates, while elsewhere in the world there's massive stimulus coming into overseas markets. So that is a recipe for higher prices for the dollar index, and not just against the euro currency, I believe against almost all of the other major currencies. So the dollar will tend to prevail.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.